Hi, everyone. So another very, very interesting 2 weeks have passed. Honestly, I hope that this action and volatility will continue for the next 4 years or so. We'll see how it goes. Excited for today's show. I'm sure we have a lot to talk about. And yeah, Raphael, hope your health is okay. I really missed you 2 weeks ago. Your views and process is always helpful for everyone. So yeah, let's start. I'm sure a lot of things happening. Yesterday we had CPI. Looks like market doesn't care. Tariffs, inflation rates, whatever, everything is going up. Actually, what was interesting today in the futures market that basically everything was green. It's very rare to see that thing. I mean, equities were green, commodities green, everything is green, and not a lot of red across the board. So yeah, so maybe we will touch on that as well. So yeah, Ted, yesterday we had a CPI, today we have the PPI. I think that these numbers were quite interesting. So what's happening in the macro space and what do you see in the markets?
Yeah, if you average the 2 days, it was unchanged, right? So just a throwaway with CPI yesterday. Let me share my screen here. Okay. We will touch on macro briefly. Whoops. That's not what I want. Sorry, guys. There we go. Okay. So we're going to talk about get me out of this range. Maybe we're headed there. So we're going to touch on macro regime and just a quick policy check. We talked about that just a minute ago. Market signals and then positioning and trades. So we still, according to my macro guy, we're still in the reflation regime, growth up, inflation up. And certainly inflation is ticking higher. GDP now, just keeping track of this. As you recall, last time coming into CPI, this tracker was showing 3.2%. The day before CPI came out, they dropped it down to 2.3, bang on the number. So anyway, we've gone back up into the low, just below 3%, according to this tracker. So growth seems to be at least steady at this point in time. As you said, we got CPI yesterday. That we've got a 3-month sort of uptrend here off the September lows. Largely, this is driven by huge fiscal spend that came into year end and around the election as the Biden administration attempted to stimulate its way to an election victory, which didn't prove successful. Likewise, core CPI up another basis point to 3.3%. The Cleveland Fed projects, this is core PCE. This is up about 10 basis points, both PCE and core for January, which I think comes out towards the latter part of this month. So that's Powell was before the Congress this week and basically saying that this is the number to pay attention to. It too is higher by 10 basis points based on this projection. So we definitely have an inflation tick up. That said, what we're hearing from a policy perspective, this is this week, this was 2 days ago, Powell was sitting before the House of Representatives and Senate, and he said, we're prepared to maintain the current level of restrictiveness as long as appropriate. There's no rush to cut interest rates. So, they feel like their policies are restrictive. I know there's a lot of debate about whether that's true or not. And then Bessent, who's the new Treasury Secretary the other day, said, Trump and I are focused on the 10-year Treasury and what the yield is of that. He's not calling for the Fed to lower rates. So these guys are focused on the 10-year bond. And then we had a couple of days ago on CNBC and then yesterday on Bloomberg, this is Kevin Hassett. He's a White House economic advisor. He said Trump wants inflation under control. And to do that, you have to increase supply and reduce aggregate demand. So you've got to cut spending and you've got to increase supply. So basically, that sounds like we want to slow the economy. And when I look at Andy Constant, who's someone I follow, don't always agree with him, but he was on CNBC last night. And I think he's got it nailed bang on about what's going on. I'm more interested in tomorrow than I am in yesterday. So he says the summer of easing of financial conditions and aggressive fiscal spending in the second half of 24 is impacting data for the last 3 months. And we've seen that. We saw that in the inflation report. And then he says the tightening of financial conditions and bond yields and Fed pause and the government expenditure cuts and tariffs will cause the data to slow in 2Q. And that's what I believe to be the case. And so in terms of signals, this was funny this morning. These are my Grok rendering of AAII bears. And what we had this morning is really super bearish sentiment came out by the American Association of Individual Investors. This is the most bearish since November of 23. Bears are at 47.3%, and that's up from 31% last week. So we're really in bearish land among individual investors, at least in terms of what they're saying or seeing or perceiving in the market. Whether or not positioning is that way, unclear. But I thought this was a big tell this morning, made me bullish. Last time, I'm just going to go through a few things that we were looking at last time, mostly. Last time when I was on, I mentioned that we got a yen with a weekly buy signal on the 17th of January. That's still hanging in there. We had some pullback over the last few days. And actually, I had a stop trigger. I'll talk about that in a few minutes. But basically, it remains intact at this point in time. Then we've got, we also pointed out on the 24th, got a sell signal in the dollar. And Vi and I had a debate about whether or not to be short the dollar or not, which is what I was getting. And that seems to be intact. And certainly we had dollar was off 82 basis points today. So definitely dollar under pressure. That remains intact. I did get a buy signal last week on the 7th of all things, the Canadian dollar, the loonie. So we did get long the Canadian dollar coming into the end of last week. Bonds, as I pointed out, had a buy signal on the 17th. That also remains intact, although it definitely gave it a run for its money yesterday. They snapped back today. Mid caps were something I was bullish on. That failed on me, and I'm totally out of mid caps at this point. Europe, what can we say about Europe? This is the EZU, so it's the Eurozone ETF, MSCI, breaking through the top of the Bollinger Band here, just ripping high. Time to take some off, but it's just an amazing bull. So we got long on that around the 17th, remain long, added to positions. Commodities had a sell signal. This is PDBC, which is a diversified commodity fund. It had a sell signal. That has been reversed, although it's chopping around right now. Really, oil has been something that is tried to get long, couldn't stay long, got stopped out, and of course it comes right back. So we'll see where this has got a large energy weighting. So we'll see what happens with that. And then most recently, I got a buy signal on DBB, which is a metals fund. And as you know, copper has been ripping since the 17th, but basically broadly base metals have not gotten on board with that. I did get a signal last week, and so I did get long of that. So where I am from a positioning point of view right now, long yen, long Canadian dollar, long GLD, GDX, SLV, and DBB. Those are the metals. I have been taking profits in GDX in particular, which is just going crazy. Long BND, BNDX, this is all bonds. I'm not long TLT. In fact, I got short TLT via TBT in my trading account a couple days ago. Worked out well yesterday, not so well today. Long CTA, long IVOL and TUA, those are some of my alternatives. And then, as I mentioned, mostly long EZU, EFA, EEM. I cut MDY, and I'm watching PDBC. So going to the charts, starting with FXY. So as I mentioned, got long here on the 16th and 17th of January. I actually I put trailing stops in each week, and I actually had a stop trigger yesterday. And as I've explained in the past, when a stop is hit for me, I take a quarter off and then I wait. And so I'm actually, my stop level right now is an FXY. FXY stop level is at 96. Where am I? 59.90, back above my stop level. So I am hanging long on that right now. Whoops, sorry guys. FXC, as I mentioned, got long Friday, added to the position on Monday. Continuing to start the process here of going higher, hopefully. GLD got longer. This is kind of a core position for a while, but got longer here back in early January, sold some on the 24th, sold some more on the 5th. And here we are, new record high today. So I'm just hanging on to my position at this point in time. GDX got long here on the 10th of January, sold some here on the 5th, took more off on the 11th. It's really just starting to move higher. This has inflected bullish. Earnings are coming out. All of these miners now are realizing the price of gold. And of course, gold is, we talked about this last time, gold is physical is constrained. So there's some real demand here on miners. Then silver, for me, this inflected bullish back on the 29th. It had been shopping around, hadn't really been working with gold. I did get long here, which is on the 29th of January, and then added to the position earlier this week. It's still not moving like gold, but I am long, I am bullish. And then DBB, as I mentioned, added about a 50% position here, added 25% more here, and 25% more this morning. TBD on this. Got a full position on at this point in time, just waiting to see if it's going to move or not. Moving on to bonds, BNDD did not get stopped yesterday, but awfully close. So I'm still long BND, long BNDX. Yesterday, actually, I backed up the truck and took the buy here because my stop was so close. I figured might as well get a full position on, which I did. And then, of course, got lucky with a bounce today. So bonds continuing to work well. This is LQD, no change there, just hanging. IEF, which is the 10-year, I'm still long, did not get stopped out yesterday. TIP is actually another one that I added to yesterday on this big pullback. So that has worked so far, although I did add earlier in the week. It had a nice little pullback here, and I thought, oh, this is a good spot to add. So I added some here on the 10th, the 11th, and then I doubled up yesterday. So I'm long TIP, TIP, Treasury inflation protected securities. Oops, did I miss something? No. And then also long EMB. I didn't have the gumption to pull the trigger and add to the position, although I had added earlier. Should have added yesterday, didn't. Added to those two other bond positions, but I'm liking what bonds are doing here. HYG got long here, still hanging in, starting to work for me. CTA, we reviewed this last time, no change. This continues to tick higher. Eyeball, this one's on the margin. So I got long here on the 10th of January, added earlier this week. It's darn close to my stop at this point in time. So I have a full position. This is really one that should be a steepener. Not much going on in the steepening world right now. So I may get stopped out of this. I may just take it off because it's not doing anything. And then TUA is a leveraged 2-year product. I got a stop hit yesterday. It's back above my stop today. I'd have a full position on. I did take a quarter of that off yesterday. So I'm sitting here, with 3/4 of a position. MDY, I went over this last time, built my position here, stop. Four strikes, I'm out. So that's mid caps, no longer long mid caps. EZU. I think we didn't touch on this. So we had that pullback back on the 3rd. This is a European stock. Got long here on the 17th, added on this pullback. Thing is a monster. Should be taking some off, but I don't want to. still want, I'm greedy, I guess, on this one. I still like the way European equities are performing. Likewise with EFA, which is All World Index ex-US. Ex-US is definitely trending, Raphael, if you're looking for some trends. These things are really starting to move. So again, same with at EZU, I added here on the 7th, working for me. Little more chop in EEM. I got long here, took some off here, took some more off here. Then it inflected bullish on me, so I added some. So I'm kind of getting beat up a little bit, but EEM seems like it's wants to work. My stop is probably down in this area, so I am long EEM. PDBC, which is this commodities fund, built my position here, took some off here, and I'm just waiting. I took this off here because volatility had ticked up a little bit, so my position sizing came down, so I took it down a little bit, but still hanging on to that. I'm not particularly optimistic about where commodities are going to go from here, particularly if we get sort of some peace in the Ukraine. If Russian oil comes back full force, we'll see. And certainly the Trump administration wants to see more oil production, so we'll see what happens. And then just closing, I have two charts I want to look at. We've been talking about SPX, and basically this thing has been chopping since November, early November, just banging around between 6,100 and 5,850, peaking above here, that little red line today. Could well get a reversal tomorrow, I don't know, but certainly is behaving well. It is bullish in my book. I do have a small SPY position in my dynamic positioning portfolio. So anyway, hanging on to that for the time being. And then lastly, similar type of chop. This is FBTC, which is, Vi asked me last time whether I have any Bitcoin, and I have an IRA where I've got FBTC long. It actually tracks a 42 macro account, which is SPY, GLD, and FBTC. Those are the three elements of that core portfolio. I do have some. It has just been chopping around back and forth in this range. I don't know where Bitcoin is going, but it's definitely oversold at the low end of the range here. Just my comment is, I don't know. It could break either side, but it's certainly not going anywhere fast. I am amazed about how the implied vol on the 30-day implied vol for IBIT, which I track, is definitely ticking down. It was below 50 yesterday. And we see the average true range, which is a realized vol indicator, continuing to decline. So not a lot of fear here. So who knows? But that's my view. And those are my positions.
Thanks, Ted. Yeah, it's not the first time I noticed that when it comes to Bitcoin implied volatility. The issue with Bitcoin is that it likes trending, and when it falls, in a lot of cases, it falls in, let's say, ordinary manner. So it just falls down without big swings, and then what happens is that implied vol gets crushed. Yeah, but very interesting. I see that Bitcoin doesn't like the potential peace and all other things that is happening in the world. Yeah, so Raphael,
yeah, it was one of your red things on the screen today. So
yeah, but I was not looking at it today. But because CME futures, I don't like them. They are not really liquid. I trade crypto on another exchange, so it was on another platform, so I was not looking at it today. But yeah, Raphael, so 2 weeks ago, I tried to give my view on all most popular assets, and a lot of things went as expected, especially the important major levels in all major indices. But at the same time, 2 weeks ago, I was thinking that maybe it's time for gold to pause a little. Well, as we can see, we had a brutal breakup, and the pause didn't happen. So yeah, what's your view on gold, and of course what you see in all other assets? Bullish, bearish?
Yeah, I've been also expecting at least some kind of dip in gold to add. You know, I mean, we are now condemned to just start to unload the long gold, and that's not something you want to do, right? You want to have an opportunity to add. So far, nothing. But so I'm gonna go through that also. So first of all, let's go to yes, the usual culprit. Okay, let me arrange the screen so I can see. Okay, should be good. Okay, so obviously the thumbnail for the YouTube video said it all. Get me out of this range. I mean, the US equity markets. I mean, talking about ES and Q and surely the Russell have been in a chop since the end of November, beginning of December. And if you like to handle your long only swing account, it's been a tough period of time. Of course, if you have a day trading account, it's been great. So that's basically the situation right now. And what we've had in the past, just in the past, 3 weeks, downside cap, now upside cap. I mean, it's insane. And when you look at the Earth value on MFR, they are not improving. If you're looking at, let's go with this one. You could check SPY, you could check futures, but let's go with the easiest one. The Earth value on the 3 month is not improving. On the 1 year, it's not improving. It's the same thing on Nasdaq, QQQ. The upside downside ratios, they are not great. I mean, definitely for the past almost 3 months, it's not been very nice for the long only swing traders. But okay, so I'm starting to notice actually that the volatility is so here, this is the blue. On the daily, is starting to maybe form a top and could be starting to point down. So for now, it's just the only positive thing I'm seeing because the rest, the chops, the downside, upside cap changing every 2 or 3 weeks, the crappy 3 months and 1 year Earth. So this is definitely the big problem, the upside downside ratios that are not good. But the volatility is definitely trying to confirm there is a ceiling and trying to point down. Another reason also, I'm going to jump quickly with to the VIX is another reason why maybe we could start to get out of the chop that we've had is the fact that we should have had a VIX spike this week. The setup was there on the hourly, and sure, we had a spike on the CPI data release, but it was very small. It was, in my opinion, inconsequential. Another thing also is the fact that we keep getting a tape bomb from the new president of America, and it has no impact on the market. We have like trade war, tariffs. We keep getting bad news, and the fact of the matter is the market is not breaking down. Also, the fact that VIX, in my opinion, from what I see from the previous instances on the VIX, you can have a look at it. For example, 19th February 2014, 8th May 2017. This is two period of time when you have this kind of elevated volatility here. unable to go back down. And what you get in this kind of period of time is actually VIX slowly dripping lower for months. So in my opinion, I think we're gonna get out of this range. We're gonna get out on the upside, and I think we're gonna get the floor of VIX to go lower in the 14th, maybe in the 13th, and because now we've been stuck in the 15th for months. So this is what I'm expecting, but I need confirmation, and so far we are not getting the confirmation from anything apart from looking at the past or maybe seeing the volatility starting to go down. But this is nothing that would make me come back into ES or NQ for my long swing portfolio. And the place to be, actually, the place where you should have been was Europe. Incredible as it sounds, considering all the bad news that is coming out. Germany, I mean, we've made that joke for a few shows now. Anytime Germany retest MFR trend, just fucking buy it. Okay, just buy it. You don't need to think, just buy it. So this is the last two instances in November. This one was in December, and this thing just keeps on ripping. Another one that I've been looking at for some time now, I got stopped at the first time I entered. This time it worked, is the CAC. So the setup is the same. I have mentioned it in the previous video. What you expect is the cross of trade and trend. This is when you get in. So I tried here the last time, but got stopped out, went to bearish trend, but this time when I came back in, it worked. And CAC has been ripping since then. So the place to be to get trending market was Europe. FTSE looks the same. Another one that doesn't look the same is Nikkei. So my best guess is because of correlation between the Nikkei and US tech. I think Vi, you have told me that in the past. Nikkei is experiencing the same kind of chop. So despite the fact that we had the cross of trade and trend, it's going nowhere. So best guess is it's because of the American chop. And you can see cap, just double cap. You have upside cap, downside cap. So you definitely don't want to buy this. I mean, except if you want to maybe place the range, that's okay. But I don't think anybody needs the hurdle. One big change, and I think we were talking about it also a month ago, was the potentiality to see the XY top. So as you know, because I have mentioned it several times, I always look back in time for major assets to mark the minimum trade value on the daily for DXY, gold, dollar, oil, you know, this kind of assets, silver, etc. And I mentioned that the dollar was about to reach its minimum daily trade value when we had the show where I was. And look what happened. DXY went to his minimum trade value. It was on the 13th of January, and wow, incredible. We had the top on the same day, so the 13th of January 25. So now what happens? We have several paths for it. Either this is just a sell-off with consolidation and then the next leg up for DXY, or it was a top and we are about to experience a phase transition, a trend transition. And several clues have appeared. First is volatility is increasing. So this is supportive for phase transition. We are, DXY is attempting to break my fractal range trend. So today we are below the trend. So the next 2-3 days will be very important to watch. Another confirmation, and I tweeted about it, is the fact that, in my opinion, Euro-USD has bottomed. So it exhibited the pattern that you get when you have a bottom for this particular asset. So it's very easy. You just use the script and you go back in time. I will scroll down now so you can have a look at the previous instance. Okay, so it's the last time it bottomed. Yeah, was yeah, okay. So what you get in this kind of phase transition is first your USD will remove range, will reclaim trade, then it will reclaim the volatility trend, and finally it will reclaim MFR trend, and then you got the phase transition. You can see this happen also here in the volatility script. So the volatility will cross trade, will confirm from below, and then you get the start of the phase transition. In my opinion, this is what happened, and this is what we are experiencing. So I'm long since last Tuesday, and I'm monitoring this position to add if we get the MFR confirmation that the trend has changed. So this is another clue that maybe the dollar has finally topped. So what does it mean? It means it's very important now to monitor the correlation of the dollar with other assets. Unfortunately for equities, the correlation with the dollar was very, very strong last week, but this week, maybe Vai will talk about that, but I don't see something meaningful to take from this change in the dollar yet with regards to US equities. Now let's go to CL, so oil. So oil future did also the same setup I have mentioned in the video I did about the trade and trend volatility, trade and trend script. They crossed, okay? Trade and trend crossed. So if you took this long, what you get is the crazy move up. Why it's started to fail here? So first of all, I got some mega sell signals. If you have access to my scripts, you saw that. Another reason is I have started to mark based on Vaidotas recommendations the previous settlement prices for previous contracts of CL. And in this area, you actually had 3 previous settlements for contracts within the past year and a half. And as I was getting mega sell, I saw that the price was starting to have issues there. You also had my matrix telling me, okay, definitely this is about to go down. So best guess is this is the reason why you had the sell-off. Now I tried to go back long here. I discussed about that with Ted, and yeah, we both got stopped out, and now it's getting back down. So best guess is, okay, this was just what? Yeah, 2 weeks dream, and now we are getting back to the bearish trend. You can see here the volatility is increasing. So in my opinion, it was just like a 2-3 weeks trade, nothing more. Another asset also that experienced the trade and trend cross setup was gold. So same, we did about it, took the position, and this one has been ripping. Keep getting sales, mega sales, suggesting that dip is coming, but so far it's not. So I also said that even though we are getting sales, mega sales, and could get a retest of trade or trend, we are still very far away from a top on gold. So again, you can mark it yourself, right? You have the daily mean for gold. This is where usually gold will start to top, get some consolidation phase before another leg up. And of course, you have the ultimate daily mean where gold has never been able to sustain its move up. So we have a lot of time before we see a top in gold. So until you see this black line here arriving at one of the daily mean, just buy any dip you see. Buy any dip you see. Raghav asked us to go through silver. So silver, you have the setup currently happening. You have a trade and trend that crossed. It was on this dip right here on Tuesday. So I hope some of you took this long on this nice opportunity to buy or to add if you are not still in this one. Now Bitcoin. So I got played around on the Zoos. I thought we had the potentiality of a trend shift. I think it was like 2 weeks ago, but got stopped out on what I thought was a confirmation of the trend break of Bitcoin. What I didn't know was that I would get a buy the dip signal on Ethereum the very next day or maybe 2 days later. So I bought actually some Ethereum. So it was, I think it was the first day we got the, yeah, it was Monday. I bought Ethereum despite the fact that it's a bearish trend, despite the fact that for now, Bitcoin is at the do or die place. So basically, either it reclaims trend or we are about to experience some serious sell-off in Bitcoin. So that's the situation right now. I mean, it's not bullish, but I'm getting so many buys signal in this space, in a lot of cryptos. So, I mean, I think it's a good place to try. And you just put your stop at a reasonable place. If you buy at the extreme, your loss is not that big. But if we have a trend shift, these things are gonna rip. So it's a good risk reward in my opinion. Another thing I mentioned also in the title of this video is the fact that, in my opinion, maybe the 10-year and the 30-year and bonds actually are about to experience some shift. So same principle as usual, right? We mark the mean daily trade value of the assets that we consider as very important in this ID. US 10-year, US 30-year, and again, US 10-year went to the mean, and what we had was a top. Okay, so this is when we started to experience the sell-off. Now, so far, it's been able to hold MFR trend, but volatility is rising. Volatility is rising. President Trump wants lower yields. And if you look at TLT, I'm going to take TLT, but you can check EDV, TLT, zeros, doesn't matter. They all look the same right now. In terms of my volatility trade and trend, we could be starting to see a shift. So you can see it looks almost like the Euro USD setup, right? You have first reclaim of trade, then reclaim of trend, volatility trade, volatility trend. Then we go to MFR trend. The only issue was this sell-off here. But so far, we are still holding volatility trade. So I'm going to monitor what happens in the next few days before calling it for real the phase transition. Especially, I would like to see trade and trend cross, but in my opinion, something is happening. So it was not stupid to buy here in the middle of January, and maybe to add so yesterday. Now let's see. Yeah, I mean that's it. I think you've all seen the absolute state of the big tech stocks. I mean, sure, they are bouncing, but most of them are bearish trend, right? So it's gonna take some time, I guess, to reclaim those trend. And except if you are doing some bottom searching, I would suggest patience. Okay, that's it.
Thanks, Raphael. Great as always. I believe Meta today made a record for any mega cap. I believe it was 19 or 17 days in a row of higher close, something like that, which is crazy. And yeah, of course, new all-time high in that. Okay, I'll share my screen. Yes, Raphael mentioned Japan, which is actually a very interesting market to me. And in order for me to talk a little bit about Japan, I will start from other part of the world, which is China. And we all know that after this DeepSeek news, we had a very big and very sharp and fast sell-off in these tech names, like NVIDIA and so on. And now NVIDIA is, well, not at the same level, but let's call it, it had a decent rebound, and some other stocks too. But yeah, anyway, so what I wanted to say that is Nikkei is actually, yeah, it has a lot of tech companies, but it also has a lot of automobiles manufacturing and especially financials, and these sectors in Japan currently have quite a few big problems. So it doesn't help the job. Here, for example, is Hang Seng Tech Index. So this index is constructed of technology companies from both mainland and Hong Kong stock exchanges, and yeah, so basically it's back to previous highs. But if we go to Japan, the situation is very, very different. Even though I like this market, but these talks about tariffs and also their own internal problems and expectancies of another rate hike, I believe, in 6 months or so, because Bank of Japan, I believe, said they will do it every 6 months, something like that. Actually, I like that transparency. But yeah, so a lot of internal problems. So with Japan, it's actually very tough. It's not the tech play when it comes to indices. Some individual companies or Japan tech ETFs, yeah, of course, but Nikkei now is definitely not a tech play at all, and especially if we see Trump tariffs for automobiles and for everything else. So Japan is very choppy, very choppy. And basically, my view now would be actually to only buy it if it reclaims a bullish trend, and at the same time upside downside ratio becomes in your favor on both regular and longer term ranges. So yeah, that was a little bit about Japan, which I watch every day and trade some futures on that. But even though it's quite heavy on tech now, Nikkei is definitely not a tech play. Yeah, what I wanted to show when I was talking about, yeah, Meta. So if you count just the closing prices, I believe it was a record of any mega company, which for up days in a row. Yeah, so first, as always, I will start with correlations. I saw that Raghav also asked about what we see in correlations. And actually, we saw very interesting signals again. So like 2 weeks ago, I was talking about that now, especially short-term correlations are very volatile, and basically they are going from bottom to top, from bottom to top, and actually when we had this very low average sector correlations, as I was saying 2 weeks ago also, that we just simply couldn't stay there because it's not really probable. Yeah, so current average sector correlations for 10 days at 0.57 are more normal than others, than other periods that we had, because we had this huge spike and also we had this huge drop. But basically, the market regime is risk on and tech play. Because we all know now where current major indices are trading, where ES and Q, especially, we were in this range, which was these levels, especially 60-90 in the ES, was and is very important and hard to break. But there are some signals that maybe after today we can break, and if we break these correlations will become very important. So what has a high correlation to SPY, and don't look at the XLK, it always has that correlation, and what has a low correlation. So we see that very low correlations are basically XLV, XLU, you can say that XLP, but I would need to be more cautious because 0.4 is not what I want to see when I say low XLC. But yeah, higher correlations are basically financials and tech. So, and it's not surprising when we look to the change in correlations. Actually, things like XLP correlation was very low. It was even lower than it is now, but now it's going up. So market is getting back to some order when it comes to defensive plays and so on. But from all this, just a sector correlation situation, again, we are not overcrowded, and every time when this market becomes just a little bit crowded, we have a very small shakeup, and we were talking about that before. But we get a very small shakeup, but doesn't matter what causes that shakeup, some news or just the fact that everyone is long the same thing, like here. But after any shakeup, we get a bounce back, and especially at these correlation levels, again, for me, it's very hard to be bearish United States equities. Now I'm talking about indices, not about some individual names. Until I see signals that market doesn't like something, or that we break some important levels to the downside. Because now we saw that buying is there. Liquidity is there, and there are a lot of capital on the sidelines still, and in money market funds and everywhere. And of course, Trump every day, whatever he announces, tariffs not or something else, he says that it will be great for U.S. businesses, very beneficial for United States of America, and it doesn't. My view when it comes to trading is that it doesn't matter what I think or maybe what we talk with other traders and so on, or not traders, but just people in general who live both in the US and other countries and say, oh, that will be bad. But market for now shows no signs that market thinks that it will be bad. So while it is, I'm staying bullish this market until proven otherwise. So what I see in correlations, of course, I see in correlations that this move again, this bounce from the DeepSeek saga is again caused by the bounce in tech companies and also the volatility that comes from our good old friend Trump, who is actually a very good friend for traders because traders are dependent on volatility. So let's appreciate that and let's use that to make some money. Of course, as always, manage risk. Yeah, but now I would suggest that I'm staying on the long side in my views, especially all this AI thing and technology companies, and not only shovels. I'm not talking by shovels. I mean, like in a gold rush, like Nvidia, people who are selling shovels, but also companies that are making AI and are benefiting from this, and even companies that will benefit even more if it's actually true that now we will have a way to achieve same or better results by spending way less money. So of course we'll see. No one knows, and I'm sure no one believes that DeepSeek trained this model for the amount they said they did, but yeah, what concerns me, and I know that some people are really watching that, which is a very important thing. What concerns me that now stock-bond correlations in the short term are very positive, and we will see how long it lasts. But basically, if it stays for long periods of time, it will be bad for stock markets. It always is, even if it's for short term. But that's the risk to think of, to monitor and think about. About dollar, I have nothing to say. From the recent price action, it looks like Ted and Raphael are right by thinking that it's a good idea to have a short exposure of dollars or reduce or increase exposure of other currencies like you did. I was not trading anything related to dollar currencies, but I totally agree with you, and especially seeing this correlation, which again, actually this regime is normal. What I see here when I see this, it's two things, or two sides coin. I see that yes, now it's very logical to expect down moves in dollar, and secondly, that's to my bullish bias on U.S. equities, because basically, when it comes to dollar correlations, we are a normal regime, but the risk to consider is stock bond correlation. I will just change the period, and now I will be way quicker. So average sector correlation when it comes to not short term, but a little bit longer term, which is 30 days, actually is even falling. So we don't see any major signs of reversals. But again, when we had this quite high for 30-day correlation levels, now we are at the low levels, because 0.5, and even below 0.5 is a quite low 30-day correlation in terms that again it's a risk-on environment, and not everything is moving to the same direction, so it gives the market some balance and some opportunities for moves that are made not by the entire stocks, but by some sectors. And take a look at that. We have XLP at very negative correlation. When I noticed that, I thought that it's very important to mention also XLV, and XLU is quite low. Well, energy, again, like I said 2 weeks ago, now I'm actually not looking for correlations with energy, because that thing is, for me now, this sector doesn't exist. I'm not touching energy stocks. I'm not looking, because yeah, it became very hard. And when we will move to Hurst exponents on my fractal range, I will show you actually why. But yeah, so if you see which sectors have quite low correlations, so like I was talking a long time, many times, that one thing it can give you ideas for some long shorts and how to express your views on the market, but actually manage risk, adding maybe some sector on inverse exposure or something like that. But when you see what has a decent correlation and what has low correlation, it's a risk-on scenario. And again, sometimes I just look at this orange line, which is as SPX, and prove me wrong, but it's not shortable here. So and you all know me. I like volatility. I want to be proven wrong. I want this thing to collapse just for the volatility and action. But well, I don't see that. Yeah, so changes in correlations we will skip. Of course, on 30 days correlation, yeah, we see that XLP, XLV, and even financials had a decent drops in 5 days in correlations where we were before. Yeah, so 30-day correlation of stock bonds is signaling risk for quite a long time. But again, I just wanted to mention that you need to be aware of that. You need to take that risk into consideration. And yeah, for now, market doesn't care. But what usually happens, and what I think that when market starts to care, when market will care, and we will have some drop in markets, actually, it will have something to do with bonds. And again, both of you agree that bonds have bottomed. For now, I have no opinion on that. I like things that I like to not predict flips and switches, but I like to act when I see real signs that it happened. But yeah, and if you are right that bonds have bottomed, well, it will not help for equity. So yeah, I always want to mention all the risks that I think of, and SPY TLT correlation is one thing that I'm looking at every single day. I want to know where it is, and we have all that information on MFR, and when it comes to this average cycle, because I still see people sending emails or to support or asking on Twitter. So yeah, you show this average correlation line. It's not available on MFR. This script on TradingView, on our TradingView profile, is free. Everyone can get it. You don't need to be a subscriber. It's a very simple script. You can just add it on a daily time frame of any US equity ticker, because it always uses SPY and sector ETF. So basically, it doesn't matter what ticker it's on, it will show you the same thing, because these tickers are hard-coded. Yeah, but you can always take a look at that on TradingView, and it's very important. Yeah, okay, so I know that at least one user noticed that, but I want you first to look at the Hurst exponent of TLT or TNX, for example. And I don't know, because now we have this these very trending characteristics in TLT, so that can cause some momentum. So that momentum, basically, because Hurst is not directional, Hurst shows memory and trending characteristics, the likelihood of move to continue. So if it leads to momentum, it will lead to any direction where the asset is going, and we all know to which direction TLT went today. So it's just another thing to consider, that this instrument likes to move in the same direction for multiple days, which is good to know. Yeah, but when I filter things by Hurst, it's very interesting to see TLT on top, because 0.8 at 3 months Hurst is crazy big, and yeah, energy, but energy it doesn't have any how to say, direction. It's very news driven. That's why I ignore that, because this burst can cause a lot of trouble. What I mean, we all know that it likes to move in chunks to the same directions, and then any news can basically, it will go down for 5 days, and then you will short it, and then it will go up for 5 days. So you, that's why I never use one number, one signal, but it's the entire process of all the data and all the signals that we use. Yeah, but for now, I'm ignoring energy stocks at all. And things like XLE, maybe it's a good idea, maybe it's a bad idea, but I mean, in financial markets, there are plenty of things to trade and to get exposure at. So for now, I'm just leaving energy forever, people to trade. Yeah, but Hertz exponent is very important. Another end, so what to do with what I said. So if you're wrong, I will not be the guy to say sell because market is choppy or market is high or whatever, because, well, now it looks like we want to make a new high. Just all we need is some momentum, because we had this range. Now we are trying to break from that range, and today's settlement price is actually above that important 60-90 level, and above by quite a decent margin. So the next level 61.60, and then my levels 61.60, and then basically we will go higher, because market always wants to expand the range. That's what market does. And by expanding the range is what I mean, that when market reaches previous high, maybe it will show some signs of reversal or so on. It will chop, but then market wants to do one little thing, bam, to expand the range to the upside. And if we don't get some major sell-off tomorrow, I mean, that's the plan. The plan is new high. And then, of course, we will have new targets and we will see what's happening. But yeah, Raphael said that major stocks, tech stocks, are not looking good, but watch Apple. I'm watching Apple since this Monday, when it appeared on my scanner based on my criteria. And actually, we have this announcement, iPhone SE. Well, it's technically not announced, it just announced that it will be a new product, but I'm sure that product will be iPhone SE. Also, the AI for China partnership with Alibaba and some other narratives. And of course, we don't trade narratives, but based on signal, I mean, one more green day, and I will be looking to do something with Apple. So, yeah. And yeah, Meta, we all saw Meta. I mean, nothing to talk about that. Amazon is quite chopping around, but still bullish. And this one, I don't call this mega stock or mega tech or mega, yeah, whatever. For me, it's I call it Tesla. It has its own bucket. So for me, it looks bad, good. I mean, it's Tesla. Everything is fine. So yeah, but it's not that bad. What I wanted to say, and manage risk. Now, the exposure that I would choose, I'm sure, the exposure that I would choose to express some directional bets, bullish or bearish, I would choose most likely bullish, but I would choose option spreads, debit spreads, because now, and especially with this Trump thing, sorry, but if we are not talking about day trading, but we are talking about having mid-term exposure, which is not investing, but having some positions like active portfolio or something to have exposure, I would choose spreads, because here we all know that one tweet or truth post, I don't know, never used that platform, but one tweet and you don't know. For now, market always bounces back, but one day it can not bounce back. So yeah, but bullish. I don't know. We'll see. Yeah, like I say, Europe. Raphael talked about that. I tweeted a lot about that. I mean, worst thing you can do, most likely, is to short Europe just because you think that it's high. Because I will tell you the fact. I'm trying to short the DAX since DAX was 10K, I believe, when I was starting trading CFDs, whatever, long time ago. My main hobby was shorting DAX. I always lost money on doing that, and just watch the signals. And if you want to make money, especially on shorting, you need to short only when you are sure that this thing is going down, and when you have a very clear level where you know that you will be wrong and you will cut the position. So yeah, so don't short Europe. I don't know. I have no Europe exposure. I don't know if I would buy Europe now, but maybe it's just my overall. I live in Europe. For me, it's hard to believe that things are good here. I think that, I don't know, in order for things to be good in Europe, every German should receive DAX futures contract, then maybe life would be way better. But yeah, as you can see, market thinks life is good and the future is very, very bright. So no need to fight that market. Yeah, I'm done.
Okay, let me check if there are some questions. So we already replied to questions Raghav sent.
Yeah.
And in the chat, yeah, people are complimenting Ted about his mindset and process. They really like it. And the rest is just some comments about bonds, but no questions. So if you have questions, guys, now is the time. I'm gonna double check also on Twitter just to make sure.
So basically, 5% on 10-year yield will not happen. Yeah.
I mean, it doesn't look like it.
Yeah.
I mean, sure, I want confirmation, but the way it looks versus how it happened before, the trend change, looks exactly the same. So
yeah,
the bond bears were celebrating yesterday.
I really thought we were gonna get the 5%, but looks like it's not for now.
Yeah.
Maybe we get it. I don't know, end of year next year, or maybe we are wrong. Okay, no questions in Twitter, and no question in YouTube. And again,
I have a feeling that next 2 weeks will also be interesting, because now we are in this let's call it quote unquote macro regime where everything will be very interesting. Every single day something new. Which macro regime Donald Trump. So yeah, will be fun.
Okay, thank you guys. So I think it's okay.
Yeah, so manage your risk as always. You have a great 2 weeks. Hopefully, we will see you in those 2 weeks. So thanks everyone. Thanks Ted. Thanks Raphael. And bye everyone.
Thank you guys. See you in 2 weeks.
Bye now.
Bye bye.